Ethan. Fraud in business seems to be all over the news lately.
Hmm.
I don't really get about it. Can you explain about it?
Yeah, of course. Fraud schemes are deliberate to act to deceive or for financial or personal gain. They affect not just companies, but also employees, customers, and society as a whole.
That sounds serious. How common is it?
Very common. A global study found that businesses lost up to 5% of their revenue annually to fraud.
What exactly is fraud scheme? Are they different types?
Fraud schemes are methods people use to deceive organizations and others for personal gain. Let me break down three common ones for you. The first one is embezzlement. Embezzlement happens when someone inside the company steals money or assets they are supposed to be managing. This could be anything from pocketing cash to siphoning off company resources. For an example, imagine a cashier taking a small portion of the day's sales and hoping no one notices. It might seem minor at first, but over time it can add up to thousands or even millions. The next, there's invoice fraud. This happens when fake or inflated invoices are submitting for payment. It could be an inside job or involve an external vendor colluding with someone inside the company. For an example, a company might pay for services that were never actually provided. The fraudster then pockets the money. The third one is payroll fraud. Payroll fraud, where ghost employees, people who don't exist, are added to the payroll. For an example, an HR officer creates a fake profile for employees and arranges for their salaries to be deposited into the officer's personal account.
Do these schemes actually happen on large scale?
Yes, they do. One of the most infamous cases is the Enron scandal. Enron, let me walk you through it. Okay. Enron was an energy company based in the US during the 1990s. It became one of the biggest company in the world with its stock price skyrocketing.
That sounds impressive. What went wrong?
Okay, behind the scenes, Enron executives were hiding the company's debt through a web of accounting tricks. They created fake special purpose entities to transfer their liabilities off the books. This made their financial statement look healthy and attractive to investors.
So they were basically a bit lying about the company financial health.
Yeah, it's called creative accounting lah. Okay, but in this case, it was outright fraud. Okay, by 2001, truth came out by an Enron stock price plummeted, the company went bankrupt, and investors lost billions.
Mm, what about the employees?
Thousands of employees lost their jobs and life savings, which were tied to Enron stocks. It was devastating. Okay. Enron's executive faced legal action. The CEO, Jeffrey Skilling, was sentenced to 24 years in prison. The scandal also led to new laws like Sarbanes-Oxley Act to prevent similar frauds in the future.
Well, it sounds like turning point in a sound how company manager manage their finance.
Absolutely. Enron became a case study for why strong internal control or transparency are crucial.
So, what are the main consequences of the fraud?
Fraud can cause severe damage in several ways: financial losses, reputational damage, legal penalties. Obviously, the economic impact. Large scale frauds like Enron can destabilize industries.
It's shocking how far reaching the effect can be.
To understand why fraud happens, we use the fraud triangle. The first one is pressure, opportunity, rationalization. Pressure is a financial or personal stress pushes someone to commit fraud. Opportunity is weak internal controls make it easier to get away with fraud. The last one is rationalization. Rationalization, the fraudster convinces themselves it's justified.
Well, that makes sense. If the company fix these issues, can they stop the fraud?
Fixing these issues significantly reduces the risk of fraud, but it requires effort and vigilance. Here's how companies can protect themselves. First one is segregate duties. Second one is conduct regular audits. Then train employees, use technology, encourage whistleblowing.
That looks like a solid plan. Do these measures actually work?
Absolutely. Businesses that invest in prevention see a significant reduction in fraud cases. Fraud schemes affect everyone, not just the business. By staying informed and taking proactive steps, we can create a safer and more ethical business environment.
Well, thank you for the explanation today, Keaton. I learned a lot today.
You are welcome. Let's continue spreading awareness. It's the first step to prevention.
Thank you.
Thank you.